got a brand new tool called the break-even calculator. And so this is also super cool in terms of what we can now do inside the Moorr platform as well. Let's go back to full screen, and I'm going to go back in here, and it's called the break-even calculator. Now, what's happening in this break-even calculator is what's the type of return that I need to get in capital growth terms to actually justify the investment. So here we've got an $850,000 property. I can play around with the loan size, and depending on that loan size will depend on the type of typical return that I need to get to break even. Now, long-term returns in this country have been between 6 and 7%. And we would expect that there might be a slight softening of those returns through affordability and obviously through some of these tax settings. But you can see here, with me just playing, you can estimate your initial purchase costs, your rental yields, all of these things, and then you get a summary and of course you've got the button that turns it from negative to, negative gearing benefits and you can see the types of returns that you need to do to break even. Now, of course, it's a break-even calculator that's factoring in what we might say as the paper profits, because we can't sell the property every year. But if you can get a return based on these numbers that are greater than that, and so we can get our yields up a little bit higher, we can see our holding costs if we can keep them in check, and you can start to play around with what you need. Now, of course, this is the short-term number with the negative gearing eligibility. When we start seeing that property being positively geared, you don't even need to make, obviously, that type of return to be continuing to build that out. Now, of course, we are chasing properties that usually deliver between 5 and 7% in capital growth, and that's what you should also be chasing as well. But just another little calculator. And I remember when I saw something similar to this in my early investing years, some 20 plus years ago, this calculator gave me a bit of confidence to say, actually, well, I'm pretty confident that properties are going to keep growing in value. And so if I'm going to obviously take a calculated risk when I was younger, this gave me a lot of confidence in terms of taking that risk around my current situation. And who likes the new break-even calculator? For those who, it's obviously brand new. Thank you for the nice little show of hands there, everyone. That's pretty cool. Thanks very much. Yeah, so you can check that out later tonight. If you haven't already created your Moorr account, I would recommend you do so. But thank you for the love that I'm getting there as well, everyone. All right, so that's the Moorr break-even calculator. And that's just now telling the story around, do we invest for tax benefits or do we invest for capital growth?